Alrighty, hey guys, Alex here with Everything Utah Real Estate. Again, got my lender Oscar here on the call with us or on the podcast with us. Today, we're going to be talking about a couple of different things. Number one is, I guess, biggest thing is as we're rolling into the end of the month here, what is our market doing? I guess we'll start with you, Oscar. What's going on in the land of mortgages?
Yeah, so we're ending right about where we ended in June. So right at the back end of June, we were right about at the 7%-ish range for kind of a top tier scenario. And we've since then had some spikes up and down for good ways. And right now we're ending right about there, right around kind of the 7% range. So there's kind of three big kind of factors or different updates, I would say, that went on in play in July that had a big effect on where mortgage rates are at, and then kind of projections and movements going forward in the future. So the first one is the CPI inflation report. So inflation is, we've talked about this already, but inflation is a big part of mortgage rates. And June's inflation report, which came out kind of the second week of July, it always comes out sometime around kind of the 12th of the month, shows all the CPI, basically all the inflation that's gone on in the month before. And the way they calculate it is kind of like having like a shopping trolley full of different stuff. So like picture like a turkey, a TV, and if you could fit a car in a shopping trolley, fit a car in and basically they look at it over time. And so month per month, and then as well year per year. So looking back, June 2022, how much did this stuff cost, and what's the difference to today? And then there's two parts of that, like overall inflation, and then there's core, which takes out your energy, takes out food, because basically, regardless, as much as we whine about how crappy it is when gas prices go up, we still have to fill up our tank to get to work, still got to do all that stuff, and we still got to eat. So they kind of take those out because regardless of the change in prices, it doesn't really affect consumer behavior. But the core, everything else really does. And so when those things go up, it affects consumer behavior. People will start to, not spend as much in certain places. So the core number is the one that the Fed is really looking at. And where the Fed really wants to get to is 2% year-over-year inflation, which is actually healthy. It's healthy to have a little bit of inflation because it pushes spending on. But we've been way higher than that for a long time. And in order to be at 2% inflation at some point in the future, we need to start hitting like 0.2 month over month. Right? So that each month we're growing at about 0.2%, because then we'd be at 2.4, which is pretty much the numbers. And the reason why this one was so important is because this is the first month we've hit those numbers, hit the numbers of if that were to continue, we would get to a normal inflation rate. And so that dropped interest rates down a chunk out of kind of the sevens. So at the beginning of July, it spiked up into well over 7, and then it went back down into the 6s when that report came out. The reason why it didn't keep going, keep diving, is because we're only 1 month in. We've had way too many kind of like getting super excited and then of stuff rolling, and then it taking a little bit longer than we expected. So the market wants to see, if that were to continue and we were to get multiple months supporting that train, then that would be really, really good for mortgage rates. So that was a big landmark that happened this month. The second one was the Federal Reserve again raised the federal funds rate, which again isn't mortgage rates, but it's the target rate of banks lending each other overnight to meet their reserves. And there's a bunch of minutia, but basically it's slowing the economy down by, business loans, credit card loans, consumer loans. Those rates end up filtering up because of this federal funds rate increase. And so the Fed is trying to walk a tight line of pushing hard to raise that rate to slow the economy, to drop inflation, but then also not pushing so hard that that there's mass layoffs and the economy is in shatters and there's tons of people that don't have any work. And so they're trying to push, but not push too hard. And that's what they've been trying to do for a while now. And so the question that's on the table right now is, are we done? Is there sufficient pressure that's been applied? And the CPI, they originally said 2 more. And so this was one of that 2 when they raised rates again. And the next one, which is the next meeting is in September, remains to be seen whether we're going to be doing that. So if we're still getting those notices that inflation is on a good trajectory, they might not need to raise the federal funds rate again. But as well, if they're showing that the economy and the jobs market can handle them continuing to apply pressure, then they might still do it just to make sure that the job's done. Which leads me to my third thing, which we this month we had quite a few. So at the beginning of the month, and then especially right at the end of the month, economics and jobs reports that were coming out, showing that were all kind of, not all of them, but a good chunk of them were stronger than expected, showing that even though the Fed has been applying pressure, to an extent, they've been able to handle it. The unemployment rate is still low, surprisingly, despite how quickly the Fed has had to ramp up this federal funds rate. And so that's, I've mentioned this, but the economic stability, weirdly enough, works inversely with mortgage rates. So when the economy actually isn't doing as hot, so for instance, picture like the pandemic, right? The Fed dropped it all the way down to 0 to kind of push the economy back up. And so right now, the mortgage rates were really low during that time, not because the federal funds rate was 0, but because the economy was like dead in the water for a little while. No one was spending, unless we're talking about toilet paper, and then a lot of people were spending, right? But for a lot of the economy wasn't going on, and so mortgage rates went way down. And so when there is evidence that the economy still is, and the jobs market still has strength, which has been shown by recent jobs reports and different things like that, kind of puts upward pressure on rate. And so that especially towards the end of the month, we mostly were in kind of the 6s range. We kind of came up towards 7 right at the end of the month. And I'm pulling these numbers through when I'm quoting these rates. I'm using a source called Mortgage News Daily, who it's an awesome resource, and basically it gives like an approximate rate across the market, just so that these are approximate numbers, but yeah, that's kind of what's gone on with the market, and it remains to be kind of seen where we're going in the future. So further down the line, as I mentioned, the next time we'll hear from the Fed isn't until September. But they're like mantra, which Fed Chair Jerome Powell loves saying, is that they are data dependent. So basically, they're gonna do what the reports are saying that they can do. And so we have a couple different inflation reports that we will receive, a couple different jobs and economic reports that we'll receive before the Fed meets again. And depending on the results of those will depend on whether the Fed feels like they need to keep putting pressure on the economy to slow it down. So, in order to get inflation back where it needs to be. So that's kind of what's gone on with the financial side, the back end side, the mortgage side, and the interest rates. And so going into this next month, inflation numbers and jobs reports are gonna have a huge weight on where we're going and where interest rates trend is headed. So
Yeah, that makes sense.
yeah,
So speaking of Mortgage News Daily, that's actually a website that I use to check what mortgages are doing daily. Right now,
yeah.
it's showing that rates are for a 30-year fixed 7.04. I guess
Mm-hmm.
you being in it every day, what are you getting people approved for right now?
Yeah, so I mean, I can definitely get I can definitely get you guys a way better deal than that. I actually legally can't like quote specific numbers on as it's advertisement, and it depends on the scenario, but I can definitely beat that. So
What's like the if you can't say it, don't say it. But like, I guess what's the lowest you've gotten recently within the last week?
um, yeah, I mean, I've been able to quote people well within the sixes, but it definitely depends on the scenario. So, and it also depends on the loan type. So when we're talking these rates, by the way, when we're saying seven, we're talking a conventional loan, a 30-year conventional loan, fixed rate. Um, so there's lots of different types of loans. You've got FHA loans, VA loans, USDA loans, lots of loans. But yeah, that's just to throw that out there. We're talking about a conventional loan, but yeah, well under that is definitely feasible. But you should expect if you're planning on purchasing a home in a using a conventional loan rather than another different loan type as of right now, to be in the high sixes, low sevens, depending on what your scenario is. So yeah.
Is that what you're advising people to do right now? Because I know FHA loans, their rates are a little lower. Are you advising people to go FHA even though they qualify for conventional no problem?
It depends on the scenario. So if you're like upper sevens, like mid to upper sevens, for your credit score. So conventional loans they're really stingy with their numbers. Like they can be a really good option if it works, but with the LOPA changes, which they're the loan level pricing adjustment. So before, really, if you're above like a 740 credit score, you are getting kind of the best rates for conventional loans. There was changes that were made back earlier this year where it's been bracketed even further, and so the lowest rates are actually 780 or above, is getting the best interest rate. So if you have a conventional loan, I definitely think if you're in the lower sevens, sixes, you should definitely have like be looking as well at seeing a side by side of a conventional or an FHA, specifically because FHA, they recently, just earlier this year, they sliced down their mortgage insurance. So it used to be a lot more than it is now. Like depending on the loan amount and everything like that, but like it can be like $100 a difference, $100 a month difference now from what it was before. So FHA now is significantly cheaper on a monthly payment than it was before, and it is a lot more forgiving with credit scores and different things like that. Um, the the one thing to be aware of with FHA, even though it does have a lower interest rate, and the mortgage insurance, though it is generally higher than a conventional loan, it's less than what it was. Also, just be aware that there is a funding fee associated with it. So there's a charge that gets added to your mortgage loan balance for doing an FHA loan. Now, it still might totally make sense for you. Your payment might be a lot lower for doing it. But if there's a marginal difference, just make sure that that you're looking at that as well, because you will most likely refinance this home. Any home that you are purchasing right now, you're going to refinance a little bit down the line, and uh, that you won't be reaping the rewards of that for too long, if that makes sense. So because that's just built into the mortgage balance. So I definitely think right now FHA loans have improved by a lot, and so be looking at both, because it's you will have a much lower interest rate and a lower mortgage insurance payment than you would have had.
Two questions for you, because I know, and
Yeah.
I know it's going to be a depends answer, of course, as everything is, right? Um,
Yeah.
but I guess what's like the average? If you could just give us a ballpark, what's the average funding fee for an FHA loan?
Um, yeah, I mean, it really depends on the loan balance, but but like generally it's like six, seven, 8,000. Like it's a chunk. It's definitely a chunk. But again, depending on what your credit score is, um, you could be saving, hundreds of dollars a month by doing an FHA loan. And if you're going to hold on to the loan, and if you aren't going to refinance for a couple of years, um, then it definitely makes sense. Or, for instance, you're not paying that cash out of pocket, right? And so if you're fine with that being added on to your loan balance, if the name of the game for you is that your monthly payment is able to fit your budget, then it doesn't matter nearly as much, right? The main
So
the
does the
main thing
funding
is being
fee
able to.
just get added on top of like when you go to refinance, you pay off the funding fee when you refi? Is that how it works?
Yeah, so it's just as part of it's just included as part of the loan balance. So yeah, it
Okay.
doesn't come out of your pocket at all. It's just rolled into the mortgage. But that is something to be aware of. And a lot of people, when they get an FHA loan, you just want to make sure that you are understanding there's pros and cons with every loan type, right? Like conventional is great if you have a high credit score, because your mortgage insurance doesn't last forever, and you have less mortgage insurance. But an FHA loan, it has, your mortgage insurance doesn't go away. Your mortgage insurance is a little bit higher, and you have this funding fee. But the pro is you have a much lower monthly payment because of.
Okay. And
Go ahead.
that makes sense. And what makes you say that, you're going to be able to refinance in the future? Because we just got a comment on our reel the other day saying that rates are going to be 7% for 10 more years. So, I mean, when are we going to be able to refi, dude?
Yeah, I don't know the last time we saw rates be flat for 10 years. I mean, I think I think that's anybody that thinks they can know what rates are going to be at in 10 years from now. I mean, I think that's great. I mean, 10 years, we should have asked someone during like 2009, right? 2010, coming out of the recession, like, what do you think is going to happen in 10 years? And we're having the pandemic and rates were at like 3%. So, first of all, anybody that thinks they know what's going to happen in 10 years is nonsense. I don't know what's going to happen in 10 years, but I do know there's going to be ups and downs. That's gonna happen along the way, and so there's going to be opportunities to refinance. There's probably going to be times where maybe it is a bit higher. Um, Personally, I think we're on the top end, and we'll see some come down. But to think that it's never going to be lower than it is right now is kind of crazy, especially because pre-pandemic for years. So from coming out of the recession up until the pandemic, we really were in kind of the 3-4 range, mostly like four, somewhere in the fours range, right? Um, so to think that's how it was, that's like where our economy was, where everything was at, and think we're not going to be anywhere in that in 10 years, I don't think is realistic. So I disagree. They can, whoever they are can have their opinions, but I definitely think we will have, there will still be there will be opportunities, plenty of opportunities to refinance in the future.
Yeah.
So
And let's just say, let's brainstorm here again.
yeah, do
What could make interest rates stay 7% for 10 years? Is there anything? I mean, I don't, unless like inflation just never comes down, like what would, or goes up.
Yeah, I mean, I think um, inflation would have to, completely spike, go against where we're at right now, and spike way up and stay there for quite a while. And while, while the economy's hot, like for the entire, I don't, to stay at a certain level, nothing is stable. Like everything fluctuates for sure. Um, but yeah, no, we'd have to have inflation completely change gears and shoot all the way back up again, which I really don't see happening. Um, what about you?
Yeah, that's kind of, I'm in the same boat, the exact same boat. I guess another question is, because a lot of people speculate that rates are just going to, kind of what happened in the 80s where rates just shoot up to like 20%.
Yeah,
I don't think inflation's, it's a completely different situation for one.
we,
And
we, we don't have the same.
yeah,
Yeah, we're not.
yeah.
Anyway, keep going.
And I think, yeah, not the same situation, but also, I don't know. I almost feel like our economy is a little bit too connected at this point to where if we did something like that, it would just screw up like everything completely.
Well, also it's we already have an affordability issue right now, right, with where home prices are at. If rates were anywhere like that, no one could afford a home like that. Having, if they like that, there would be zero demand for homes really, because like if you go ahead.
Oh, I was just saying, let's do a little bit of thinking here. Let's just say if you got a $500,000 home, let's just say that's your loan amount. So at a 7% interest rate, your payments are going to be, gosh, sorry. Oh man, this isn't working. Your payments are going to be $3,300. Now let's just say you got an 18% interest rate like your parents did. Your payments would be $7,500. That would suck, dude. I'm not gonna lie.
And that's saying that home prices don't appreciate. Yeah, exactly where they're at. Which again, Alex, on your side,
That's actually
your
coming
home
down.
prices.
That's actually
Yeah.
coming down a couple, $100,000.
Oh, okay. Yeah.
But
There we go.
I think if rates shot up to 18%, I mean, I don't see how home prices could stay where they're at. Granted, now if
No.
you think about
No.
it,
Well,
there's no way someone's just going to sell their home for, they bought it for 300,000, they owe 300,000. They're not going to sell it for 100,000, right? There's just no way that's going to happen, regardless of what
no
interest
one
rates
would
are at.
move. Because as well, I mean, people are selling the house. They're selling to move somewhere else, right? They would sell their crazy low interest rate to buy at an obscene amount. Investing would go through the floor because there would be zero ability to cash flow, even get anywhere close to cash flowing on any kind of investment property. So yeah, it would.
Yep, you'd
Yeah,
be screwed. It would suck really bad.
yeah,
Builders would be the worst off out of anybody actually, just
yeah.
because they're so high in volume, like they have to move so
And
much.
demand would shoot through the floor.
Yeah, so that wouldn't be cool. Chances of that happening are extremely, almost zero.
I like looking on the happy side of life. So some people might choose to be really depressed, but and think of having 18% interest rates. But I don't see that happening anyway at all, and so I'm not gonna get super sad thinking it will. So yeah,
I agree.
yeah,
I
for sure.
agree. As far as
Dang.
as far as the market goes, because we talked a little bit about the lending side. Now, as far as the realtor real estate side goes, it's starting to kind of like how I was saying it's starting to slow down a little bit. As of right now, I will give you the most up-to-date data possible. We have, once it loads, goodness gracious, maybe. Okay, we have 8,390 homes on the market. So that's an increase, a pretty substantial increase from the last couple of months. We went from basically 7,000 homes to 7,200 homes to 7,500 homes to 8,000 homes to where we're at now, basically 8,400 homes, right? That's a pretty big increase. And why is that happening? Well, let me tell you, the time of year. The time of year can change what the market does by a lot. My phone has not stopped ringing for the last 2 months. And then all of a sudden, this last week or two, it's starting to get a little bit more quiet, right? I'm a little lonely now. I'm not having my clients call me up and ask me how my day is going. It's a little bit more quiet. But that being said, am I still busy? Yes, just not as busy, which is, I kind of like it sometimes. But that being said, it's just the time of year. It's starting to slow down, and it's going to continue to do that, right? As kids go to school, as winter starts creeping in. Believe it or not, that has a huge effect. With events and stuff. It's going to slow down. And what that means is inventory is going to start increasing, right? And buyer pool is going to start decreasing little by little, right? And then eventually, once inventory gets to a certain point, this is like March, April, May, buyers start hitting the market again, inventory starts going down, and then June, July comes in, and it's just a crazy frenzy again, like how it was. So last week, or a couple weeks ago, I mentioned average sales price was, what was it, 614,000, something like that. We've actually come down. So average days on market has stayed pretty steady at about 40 days. Average list price has been coming down, and average sold price is down to all the way 604. And like I said, it's just because of the time of year, right? More inventory, less buyers. Prices tend to just kind of come down a little bit. And it's not a crazy decrease. We're not going to see like a crash or anything, but that's just how the market is, right? So we're all the way down to 604 right now. And if you remember in the last video, the very peak of the market, like last April, was around 657,000. So if you're thinking about it from that perspective, now's a pretty decent time to buy. And I think at like pretty much from this point on, up until like February, I don't think buying is a bad idea. If you were buying in like June, July, probably not the best time just because it's busy for sellers, right? It's a good time for sellers, which means it's not a good time for buyers. It's not going to be a good time for anybody, right? It's got to be bad for one side. But as we're moving into now, I think it's a great time to start looking to jump into the market. If you're a seller, you have to be looking to sell very, very soon, like within the next couple of weeks, if you want to get top dollar, right? Or you should have done it a couple months ago. But if you're a buyer, now's a pretty good time to get your feet wet, starting to go look at homes. If you find a great deal, jump on it. If not, if you're waiting a month or 2 or 3 months, it's not a bad idea either. I don't know where it'll go. I just know that inventory is going to go up and buyer demand is going to go down. Unless rates shoot down, like 6 or 5%, that could totally change it. But as of right now, that's what it's looking like.
Hey, Alex, quick question for you.
Yeah.
So I'm just curious, because you're talking about how right now it's like homes on market for about 40 days. Have you seen that? Like, I'm not sure how long they were on the market back during like 2020, 2021, but I imagine it's like a lot less than that. So how have you seen it increase?
Yeah, so it depends on, it's a depends answer, right? So it depends on your marketing strategy, right? So I'm just going to give you an idea. So when the market was crazy, you'd be lucky to have a home sit that you were looking to buy on the market for 2 weeks. You'd be lucky. That'd be like crazy. You'd be getting a great deal at that point. And then it would be gone, right? That's what it was like. And then it shot all the way up about 2-3 months ago. Average days on market was almost 60 days. It was like 54 days or something. And that's when rates were like, that's because we were coming out of winter, right? So, and then that's also because rates were like 7% still. Rates are still 7%, but the days on market has gone down because of the time of year, right? More buyers are on the market, less inventory, houses go faster, to where the average is about 40 days. Myself, I've put up like 3 listings in the last couple weeks, and I have another one going up in like a week or two. My average days on market right now is like 15 days or something. My last 2 listings went in like 4 days, and that's all just because of strategy, right? Every agent, regardless of skill level, is going to have a different strategy from another agent. I just have a little bit of a different strategy. It makes homes go a little quicker. But yeah, does that answer your question?
It does, and I have a kind of a follow up one for you because right now, a bit less in the summer, but right now, much more than in 2020, 2021, it's more possible to get like seller concessions from sellers because the power has very much shifted. Did you see kind of that fade away a little bit in June, July, and are you expecting that to kind of come back into regular transactions?
Yeah, it depends. Again, another one. So I'll give you an example. I had a listing in West Valley go up. Townhome, pretty nice townhome. Um, we were competing against 5 or 6 different active homes in the community. Actually, by the time we went up, I think it was less than. I think it was like closer to 3 or 4 active homes in the community. So we had some competition, but we listed, great open house, super busy. Phone did not stop ringing it's still ringing from that listing. I still get sign calls from it. But we went under contract super quick, and the buyers didn't ask for anything. Zero. We actually ended up going like $40,000 over asking. During our due diligence period, guess how many items they asked for?
0, I'm guessing.
Yeah, 0. Exactly. They asked
crazy.
for nothing. I've never had that happen in my whole career.
Wow,
I've never had nothing. They didn't even ask for like.
that's some low maintenance buyers. That's great.
Yeah, it was crazy. So that happened. And I think that's an anomaly, but that being said,
For sure.
there's still 3 or 4 other active homes in the community that have been sitting on the market for 40, 50, 60 days. One actually is still sitting. It's been up for, I think, 70 days. That home, you could totally go in and say, hey, I want this, this, and this done. And they're going to have to do it or else they're not going to sell the house. But with my clients, there was just we got like 14 offers. We're not going to negotiate at all.
Yeah.
Unless you want to like increase price, and then we'll pay some. But other than that, like we don't have to. So it's case by case. But I think overall, I don't really, depending on the strategy you have for buying, it's not impossible to get concessions. But like June, July, it's definitely harder because there's more competition. Yeah. And I think as we continue forward, there's going to be less competition, which means it's going to be easier to get that kind of stuff.
Yeah, just as the kind of like the power stick kind of gets tossed back and forth between seller and buyer.
Exactly.
Yeah, that's cool.
But yeah, it's gonna start getting very interesting. One thing that I said in the first podcast was that we are in a recession. How do you feel about that comment? I think I'm actually starting to reconsider that.
It's weird. It's a weird time. It's because I've read, a few articles because on one hand, we had, last year we had multiple quarters of negative GDP,
Yep.
which historically has been used to basically show a recession. We've had an inverted yield curve, which has been used always to indicate a recession. Still inverted. Um,
Oh, is it?
and yeah, I believe so. Last time I checked. And there have been like many companies, especially major companies, that have had huge layoffs. Like there's been a lot of stuff like that. But then on the other side, you have an unemployment rate which, even though it's ticked up and down a little bit, but it's stayed close to the 3.5. It's been like 3.5, 3.6, 3.7. That's a low unemployment rate. And you mentioned this before, but Utah's is even lower. I think it's like 2 point something, 2.3 or something like that, 2.4.
Yeah.
So but national average, we're still at a very, very low unemployment rate. And even though some parts of the industry have experienced, a rough time where there's been a lot of people that have lost their jobs, on the other side, there's other sectors that have really flourished and succeeded. And so overall, and that's kind of as I was talking about earlier with the jobs reports, that overall across the board, it still shows strength. And we have had positive GDP for the past, since the last few quarters. So it's interesting. Everyone, even so, Bloomberg even said, the latter part of last year that I think it was Bloomberg. If it's someone else, I apologize. And there's some other organization that, but I believe it was Bloomberg that said that they were 100% confident of the recession. That's a big number to throw around. But right now, it's there's still a lot of economic strength, and the Fed have cranked up the federal funds rate to basically be putting on a lot of pressure. So in some ways, you could show some recessionary indicators with the job loss, with the period of slowdown in the economy, but on the other side, there's not. And so some people are still predicting that we're going to see more overarching, like kind of universal recession, but other people not so much. So now, so I don't know. It remains to be seen. But very much I was on the boat and on the train of, yeah, obviously everything is showing that it's 100%, recession, even like currently in a recession. But there's just been so many reports, and not all of them, but there have been a lot of reports, and specifically, the NFP report, which is a big major jobs report that gets released every month, and numbers of like the unemployment rate continuing to stay below 4%. That show it might not be on the cards. So which let me just, yeah, I work as a mortgage loan officer. That kind of isn't super great for mortgage rates, but for the vast majority of people that exist in the world, that's great news. So happy days. I'm definitely not gunning for anybody to lose their job. I don't really. I want to make sure that's not the perception. But for mortgage rates and different things like that, a full-on recession isn't looking quite as obvious or quite as like just straight line as it did. What are you thinking, Alex?
Yeah, so I was thinking the same thing as like, okay, well, we had the multiple quarters of GDP loss, like blah blah blah, this and this, people are getting fired, all this crap. And I was like, oh yeah, like we're I would say we're in a recession. But if you think of like, okay, what is a recession, right? It's okay, well, the the country's losing money, people aren't spending, people are scared to spend, people are they're staying put, they're not really making any changes in their life. That's not really the case, as well as unemployment, right? Unemployment is super duper low. Yes, people are being fired, but you have to look back in time. How many people were hired during COVID? A
Yeah.
lot, a ton, right? Overhired for sure. Now those companies are starting to lay people off. We're basically just trimming the fat. I'm sorry if you've lost your job. I'm sorry, but that's what it is. It's trimming the jobs that they didn't really need. Now that we're
A
starting to
lot of
catch up.
Yeah, and a lot of it is coming from, and it's because I know a lot of people that have lost their jobs, and it is, but it is like these kind of larger companies, like a lot of tech companies, a lot of like remote employees or different things like that that have been kind of sliced down. So, and then as well, we had. I mean, we had those banks that failed, obviously,
Yeah.
which again was like, oh, massive recessionary indicator. When banks fail, that's like recession 101. But further looks into it showed a lot of indications of mismanagement of those banks rather than there being an all-out banking contagion that was going to decimate kind of the economy. So I don't know. Yeah, so that's not quite as, even though there's been lots of different indicators from both sides, and you like for instance on Treasury bills, the 2 year is still like, yeah, the yield curve is still inverted, but it's I don't know. It's interesting. I guess
Yeah.
we'll see.
It is very interesting, and I would say we're not in one right now.
I
But
would agree.
are we gonna be in one? Maybe. But our economy is just way too strong right now for me to say like, oh yeah, we're in a recession. You know, um, that's just my opinion though. That being said, all these bank failures, because we've had a couple, and I think if I remember right, we actually had one recently, not like super recent, but a couple month or two ago. I have to read back, but um,
Are you talking about the First Republic Bank? That one happened
that one.
after, yeah. So there was the Silicon Valley Bank and the Signature Bank, which happened kind of back to back, and that was like the focal point because I think after the Lehman Brothers failure back in, you know, during the recession, I think Silicon Valley and Signature Bank was like the second and third biggest bank failures of all time.
Yeah,
Oh,
actually,
and
Credit Suisse.
then yeah, there was that one as well. Yeah. So, but yeah, First Republic Bank as well had I think had a whoopsie daisy as well. So yeah,
Yeah,
there was quite a few in there. But I know at least for Silicon Valley and Signature Bank that there was, it definitely seemed like there was many other factors at play rather than like a definite showing of economic collapse. So
yeah. And what do you think the chances are of? Because I've had this told to me a lot of like, okay, the Fed's going to increase rates more, and then all of a sudden, like, Chase and Wells Fargo and like all these big banks are going to fail, and then all this crap is going to happen. What do you think the chances of that happening? I'm thinking it's super low because
I don't.
it's
I mean,
so
the
scary.
Feds. We're at the top. We're really like right at the top end of the Fed cycle of hiking rates. Like the Fed's not going to hike it much more than it has been. Um, and I'm trying to remember exactly what it was, but I just remember seeing some graph. Silicon Valley and Signature Bank, just the way that they were run were definitely outliers where it was very different to like Chase to all these other ones. I so no, I don't see, because as we've said, kind of the Fed has, we would have seen weakness, right, already. Once inflation is kind of under control, probably in not this year. So originally, it was thought like earlier towards the beginning of this year, it was thought that towards the back end of 2023, the back end of this year, the Fed would actually begin slicing down the federal funds rate and coming down from their highs once it was kind of shown that, okay, we're good, inflation's kind of sorted. That's no longer, definitely not going to happen in 2023. Maybe 24, maybe 2024, but or possibly 2025. But we're definitely, the Fed, all the communication from the Fed is they anticipate, no more than one more hike, and it's like a very small hike. They've done some pretty big drastic moves up from where they're at, but there's not going to be much more pressure pushed on from the Fed than what's already been done. And so no, I really don't see a banking contagion, which that's, tons of banks kind of folding and bank runs and all of that fun stuff that happens. So I really don't. Unless if you interested, you think differently though.
Yeah, no, I agree. I agree 100%. Unfortunately, like I feel like if these big banks start failing, because our economy is so intertwined, and it's not just the U.S., it's the whole world. Like uh, Chase is one of the biggest banks on the planet. I think I think they're pretty up there. And if they fail, we kind of all fail. Like if these big banks start failing, it's basically suicide for the whole country. Like it's not going to be a good thing. It's not like, oh,
Well,
my cheap house now. It's like, no, we're all
yeah,
screwed, man. Like it's not good. So chances of the Fed raising rates to where these big banks start failing are super low. And these big banks are run a lot differently, like how you said, than these smaller banks. I mean, they're still big banks, but they're smaller banks. They're run a lot differently. So chances of something like that happening are low. Not impossible. Nothing's impossible, but very low.
but it's definitely as well like the Fed is not trying to do that at all. Like that would
Yeah.
cause massive ripple effects across the economy to have like these huge financial institutions, um, even bigger than the ones that have failed. If we're talking about, you know, Silicon Valley's Signature Bank being the second and third biggest banks to ever fail, if like Chase or, some of these other like Wells Fargo, these other like really big banks, much bigger banks failed, it would have huge ripple effects across the economy, which is the exact opposite of what the Fed's wanting to do. They're trying to increase pressure, but they're not trying to decimate the economy. So that's yeah, that would I think they would be trying very hard to steer very clear of that. So if that was something that looked like it was on the cards, I think they would take pretty swift action.
Yep, I agree. Another question is, what are some things that would cause? Because we're getting a huge influx of people moving to Utah,
Yeah,
still, and it hasn't stopped, unfortunately, for our traffic times. But I guess what's causing people to move here so much?
yeah. It's really cool to see because I mean I remember when I moved here from the UK, I was working at like Thanksgiving Point during high school in Lehigh, like at that JCW's. I don't know if you've ever gotten a
Yeah,
jalapeno bacon burger there or something. But but there was like the only businesses that were there. There was like JCW's there. There was a Del Taco, and there's Thanksgiving Point, and now there's like it is, especially Lehigh is just exploded, but not just Lehigh, like it's spread out so much. And so there's so many, like even just food, there's a bajillion like food options right there. But as well, there's tons of different businesses that exist there, lots of different tech companies. And obviously, we talk about Silicon Slopes, but there are so many different there's so many different companies for people to join. So there's lots of growth. I was looking up some statistics just recently, and it had over the past 5 years for state GDP growth. I think Utah was number one, and for business growth within a state, it was number two. And so Utah is like right up there of just absolute explosion. And so people are moving in, first of all, because of all these different job opportunities. It's also a beautiful state. I mean, my wife's from Colorado, and she gets, I'm not a huge Denver fan, just because it's cool and everything, but like Utah is such a beautiful place where you are just so right up by the mountains. There's so many, amazing opportunities to go outdoors, skiing, hiking, everything. So I think lifestyle is incredible. It's way cheaper than like California, even though we're way higher than we were compared to them. We're still a bargain. Yeah, and I think company growth is huge. So were you have you lived your whole life in Utah, Alex?
Yeah, dude, born and raised. So I was
There we
actually,
go.
yeah. So I spent most of my early years in like Rose Park, which is like
Okay.
the really ghetto area of Utah. It's really not that bad. So I've been to other states. So we went to Arizona for a Tough Mudder, and the not the nice part of Arizona, but like the West Valley of Arizona is way more sketchy than the Glendale of Utah.
Oh yeah,
it's
yeah.
it's really
Utah's
not bad.
pretty. Yeah.
Yeah,
No.
it's not bad. That being said, though, yeah, so that's where I spent my early years, and then I moved from, I lived in Mill Creek for a little bit. I lived in West Valley, which is where I spent most of my time. West Valley, then Magna, and then now I live in Lehigh. So I've lived like all over the board. Absolutely love the state. Like I've lived here my whole life, been to other states. I don't plan on moving out of Utah. Everything that I like is here. I'm not a party person, so I don't need like nightclubs in California or anything. Like I'm I like being home. I like being able to go out and do cool things, and Utah has everything. I mean, we have all four seasons, for better or for worse. We have them all. And we have all the biomes. I mean, if you want desert, we got desert. If you want dirt, we got dirt. If you want forest, we have that too, and mountains and all that. So
Yeah. There's plenty of dirt in Utah.
there's a lot of dirt. um, but yeah, I don't know. Utah's great. It has everything I need, at least. And like you said, going on what you said, the growth is crazy.
Insane.
It's
Yeah.
It's nuts. I mean, like I said, I used to live in Mill Creek, and seeing what sugar houses turned into is crazy,
Yeah.
dude. In like a couple years, like that, boom, there's like buildings everywhere. I didn't even know
Yeah.
there was enough land for that over there when I was a kid. I was like, it's going to be like this forever. No, it's not.
And it's cool seeing, like, even in the last couple of years, like the last 5 years, um, like Facebook built like a massive data center, like a massive facility out in Eagle Mountain, Cedar Fort area. So like out in Utah County. Amazon just a couple of years ago built a huge fulfillment center here. I think there's a lot of big players. Adobe obviously has a massive place here. Um, there's a lot of big companies, big players that are coming into Utah, and I think we'll see more and more of that. I wouldn't be surprised if you have people like Amazon and Google who puts up shop here at some point. Not Amazon, like Apple or Google. There's a lot of big companies that I feel like in just and not just companies, but people in general, I feel like Utah has really kind of opened up a lot of eyes of the possibility that exists here. So yeah, I think the influx is awesome. And so, it's as for someone who's looking to buy a house, that's that's that just shows growth. Like I'm talking about, I was just talking about Thanksgiving Point where there was nothing there. That includes behind it. It was like fields and nothing. And now there's like homes, and there's a lot of opportunity to be able to get amazing appreciation with your house in a place that continually beats national averages, continually beats, all the statistics and job growth and unemployment rates and everything. Utah really it has seen such a move to the up, and it doesn't look like that's changing anytime soon.
Yeah. And not to get like political or anything, right? We don't want to go too far down that rabbit hole, but
Probably not, yeah.
our policies, like compared to like California, I mean, we saw it during COVID, right? California went kind of a little, you could probably say a little too far on one end of that, as far as keeping everybody locked up inside, and I think a lot of people that kind of opened their eyes to like, oh yeah, I don't like that. I like freedom, and they started looking elsewhere, and a lot of people moved to Texas, a lot of people moved to Idaho, and a lot of those people moved to Utah because our laws, and you could say whatever you want about how involved the church is here, but our laws are pretty rock solid. I mean, there's things I disagree with a lot. There's things that passed recently that I disagree with, but for the most part, it's a pretty good state to live in.
Yeah, and I know I'm really connected to, I know people that have had expanding businesses and have, not gone into California just yet and have looked to spread out in Utah and other states because there are regulations and stuff like that are so much more difficult for businesses and different things, like where Utah is very expensive. So both on a personal and a business one, it's definitely helpful.
Yeah. What are some things that you like doing in Utah? Like that you don't feel like you could really do as easily in other states?
Well, there is nowhere else on the planet like Moab. Like that, I feel like every spare moment in college was down there hiking around and climbing around. So it's cool. It is cool as well. Southern Utah. I've met people from France, people from like all over the world that will come in and experience, the different. I love rock climbing. I think rock climbing is awesome, and hiking and basically anything outdoors. But rock climbing, especially, there isn't really anywhere else in the world like it, and so people from all over the world flock to Utah for that. So that's me. What about you, Alex?
Yeah. Have you been? So I've actually, I, everyone talks about the snow here. I've actually never been skiing or snowboarding, which I feel like is a
Ooh,
mistake.
I love snowboarding.
Do
Yeah,
you?
you need to do that. I can't believe you've been in Utah your whole life and never done that.
It's
Do it
just
this winter.
it's
You
a
gotta do
fear
it.
thing, man. Like I don't know what it is. Anytime I'm up higher than like 10 feet off the ground, and I
Mm.
know with snowboarding you're not off the ground as much,
You're
but
talking
like,
like the ski lift.
well,
Those
those two, those aren't my
okay.
favorite either, probably. But I'm saying more so just like, okay, there's a mountain. If I slip and start rolling down it, I'm not going to stop for a while.
Hmm.
So it's like, I don't know. I think it's a fear thing, but
I get
I
that.
got to get over it.
It's I've never skied. I've heard skiing is the best for like starting out. Um, with a snowboard, once you know kind of the basics, I feel like it's easy to stop from going too fast. But either way, it is a lot of people. I know a lot of people from Colorado say that their snowboarding and skiing is best, but I don't know. Utah, they kill it. So yeah,
Yeah, that
I
makes
learned
sense.
I learned how to snowboard on Sundance's Bunny Hill, like I don't know if they still have it, but yeah, I would do it. It's a thrill that few other things can do.
I need
So
to. I need
you
to.
don't have it. You have a fear of heights.
Very bad. Very
Yeah,
bad.
I yeah, I thought I did, and I still do, but my wife made me go skydiving in Moab, and well, that about emptied my bowels, but that was uh, talk about amazing things to do in Utah. Yeah, that was pretty cool as well. So um,
Oh
yeah,
man. I want to go skydiving too. That kind of stuff just scares the crap out of me. But that's like on my bucket list. I think I flew planes in Vegas, like actually flew planes. They let us fly them, the stunt planes.
oh wow,
That was sick. That was so cool. But it actually makes me want to get my pilot's license.
you just
But
gotta jump out of one. Yeah,
yeah, that thing, jumping out of a perfectly good airplane doesn't sound like a good idea to me.
yeah. Well, it helped that I was strapped onto another guy who basically like rolled me out. Otherwise, I might have just sat on the edge forever. Also, the plane was super. It seemed really rickety, so I was like, it seems like I'm going down one way or the other. So, also my wife jumped out first, so I was like, well, if she can do it, I don't want to look like a chicken. I got to do it. So,
That would totally help.
yeah,
But
for sure.
I agree. I mean, yeah, like ton of crap to do in Utah. Like my a couple of my favorite things are so I actually have never been to Moab either. Crazy, right?
Alex.
But I know I'm not a good Utah. I don't know what's going on. Um, but I have an FJ Cruiser now, and if you know what an FJ Cruiser is,
Ooh,
it's a Toyota, basically a Toyota Jeep. Um, and my plan is eventually, hopefully this year next, take it down to Moab and see what it can do on the rocks. But yeah, that'll be cool. And then I like going off roading a lot, off roading, shooting, airsofting, crap like that. I'm more and hiking, of course. I mean, you have to, but um, I'm not an outdoorsy kind of person. But when I do go outdoors, Utah has literally anything you could ever want to do. As far as like, I mean,
for sure.
I'm not much of a nightlife person, but I have a lot of friends who are. And they don't have any problems finding things that they like down in downtown Salt Lake. But yeah, I mean, there's a ton of crap to do. There's a ton of different. The other thing too is with all the people moving into Utah, there's so many different cultures that you get in Utah, and they don't clash. Like we've never had, at least in as far as I know, there's never really been a time where like cultures like really clash and don't do good together. So whether you're looking for a restaurant or just people to talk to, there's whatever culture you're from, you can find people here. Um, but yeah, I don't know. I don't know. What do you think?
Yeah, I think it's really cool. There's good food in especially in Salt Lake. There's lots of good different types of food, and yeah, that I mean, as I mentioned, there are people from all over the world that have moved to Utah, which is cool. I mean, I did so from England. So, but yeah, it's cool. It's a cool place. So it makes sense that there's a lot of people. Oh, go ahead.
Oh, I was just gonna say, like, coming from England, I mean, you never so in the movies or on TV, you never hear like, oh yeah, like Utah, from Utah. Like, you don't just hear that. I mean, it's usually like, oh yeah, like we're from Los Angeles, like in the movies or whatever, Hollywood, all that crap, New York, all the big cities. You never hear
Mhm.
Utah thrown around. So, what made you move to Utah, of all places?
It helped that I was still a minor at the time, so I was 17. So I kind of went where my family went. So
That
um, I actually I had a lot of family that already lived in Utah, so lots of cousins, aunts, uncles, even a set of grandparents that had already moved over for work or for school or different things, and kind of had all congregated in Utah and different places in Utah. So the main reason was being close to family was why we moved over there. But yeah, no, there's a lot to love. So yeah, it's a cool place. But it makes
Yeah.
sense. There's so much. It makes sense why people are flocking there, and it makes sense that people will continue to flock there because the economy's great, lots of job opportunities, and it's a sick place where you should definitely snowboard and go to Moab and skydive. But I've never been. Yeah, I don't know. Did you say you dirt biked? I've never dirt biked or anything like that. So
Yeah, so I
or
don't
flown a
dirt
plane.
bike.
Definitely never done that.
I
So
don't dirt bike, unfortunately. I know a guy in my brokerage who dirt bikes, two guys actually. I've always wanted to, but I just need to buy one. That's my next thing on the list. And I need a trailer so I can tow it. But yeah, I don't know. It's definitely an interesting state. I hope, just from a not liking to be around too many people perspective, I hope we don't get too many people down here, but I don't think it's going to stop.
well, I think it's going to spread out.
Yeah,
So like places down in like south of southern, where it's right now it's Utah County, Salt Lake County have just exploded and it's spreading out. So for instance, like there used to be like nothing out on Eagle Mountain, and now it's becoming way bigger, and Saratoga, and same as you're going further north and further south, like Mapleton, Spanish Fork, um, all of these different places, and further south used to be a lot less populated than they are right now, and home prices a lot less than they are right now, and they're just exploding. And I think it's going to continue doing that, where it's spreading further out from this epicenter of Utah County and Salt Lake County, and so to envelop it more. So maybe not so as much, just like getting further densely populated in this space, but just expanding its reach. So
I
yeah,
would
it's cool.
I would almost disagree with that. I mean,
Oh,
I
okay.
agree with you, but I disagree in some ways as well. So you're right. Like we have dirt, but we don't have much more of it left in places like Salt Lake, really mainly just Salt Lake County, but also getting into Utah County. Lehigh's running out of land too, really low availability of land. Saratoga's starting to get there. Stansbury's starting to get there. Ogden. So we're going to go further north, south, and west. Not as much east because there's just mountains for days over there, but we're running out of land. But what's going on now is developers. I am actually working with one from New York. They're starting to look to go upwards because if you can't go north, south, east, or west, you have to go up, which a lot of them are looking to do. They're starting to go vertical, starting to build more apartment buildings. So yeah, that's what I'm thinking is yes, we're going to continue to go north, south, and west, but also places like especially downtown or closer to downtown. That's when we're going to start. That's where it's going to start going vertical, and then that's going to start spreading out a little later. I don't think like West Valley's going to get super super big apartment buildings. I don't think like Harriman's going to be like that, but definitely closer to Salt Lake. It's going to, in my opinion, that's what it's going to start looking like is more verticality. But that's just my opinion. In fact, they're actually looking to build multi-million dollar homes on Utah Lake, which is going to be interesting. Like little
Oh, are they
islands.
actually doing that? Like, I know they've talked about the road across it, and I know they've talked about it a couple
Oh no.
putting like islands in Utah Lake. Is that
Yeah,
happening?
I think they're going to. Um, to my knowledge, this city hasn't given much pushback to that. So I don't think I think that's going to happen eventually.
Yeah, it's going to cost a fair penny, but it's
cleaning it up in the first place. But
Utah Lake is, Utah's a beautiful place. Utah Lake, not the best of the lakes.
Yeah, Utah Lake. I don't know if I'd want to live in Utah Lake.
If you've ever been like boating and fallen in and you get like the sludge up your, I don't even know if you can still boat in it. I don't know. I know I did when I was younger, and it's, I don't know. They could do some cleanup on it. It would be nice to have that.
Yep. But I don't know. It's gonna start getting really interesting here in the next little bit. I'm excited to see what's gonna happen. What are you thinking, Oscar? You got anything else you want to get off your chest?
No, I think we're good. I think so Utah, if you're listening to this and you're thinking, you're humming and hawing about where the next move is, hopefully we did a good enough pitch. The governor pays us well enough to preach. No, I'm just kidding. But that would be sweet. Just if Governor Cox could just for advertising their state, his state. But no, I mean if you're looking at shifting to a different place, if you're living in somewhere like California or Pacific Northwest or somewhere else, and you're just looking to either expand your business or shift personally into a different place, Utah really is one for right now and also one for the future.
Yep, I agree. Well, guys, if you've made it this far, you are a real one. We appreciate you always. Make sure you guys comment below. Let us know what you guys want us to cover in the next video. If you guys have questions, let us know. As always, follow us on social media so you can ask us questions that will be answered on the podcast. You get a shout out and everything. I don't really have anything else I want to cover either, but like I said, we appreciate you guys. See you next time. Booyah.